Japan's government and ruling parties are actively preparing a series of tax reforms for the 2026 fiscal year that could have significant effects on everyday life, from income thresholds to home buying and travel costs. These proposals are part of ongoing efforts to balance support for households, economic growth, and changes in social needs. Income tax threshold raised to support workers. One of the key measures agreed upon in discussions between Prime Minister Fumio Kishida and the leader of the Democratic Party for the People, Kimitaka Tamaki, is raising the so-called income tax wall. This reform will increase the threshold at which income tax starts being applied from the current level up to 1.78 million yen, meaning many more lower-income workers will no longer pay income tax. The change is designed to benefit individuals earning up to roughly 6.65 million yen, helping alleviate tax burdens on middle-class and low-income households. New Children's NISA program in final stages. The government also plans to introduce a Children's NISA, a tax-advantaged investment account for children. Under the current proposal, parents could invest on behalf of their children from birth, and, with the child's consent, funds could be withdrawn once the child turns 12 years old. This measure is aimed at encouraging early investment habits and supporting families in building financial assets for education and long-term needs. Limits proposed for Furusato Nozei tax deductions. Another change under consideration is placing caps on tax deductions under Japan's Furusato Nozei hometown tax donation system. This popular program lets taxpayers make donations to local municipalities in exchange for deduction benefits and often gift items. However, concerns about its fiscal impact have led the government to propose limits on how much can be deducted. Automobile tax cuts to boost purchases. To stimulate demand in the automotive sector, particularly amid global economic pressures, the government plans to suspend the environmental performance tax on vehicles for about 2 years. Removing this levy is expected to lower the cost of purchasing new cars and support both consumers and the domestic auto industry. Support for families through new deductions. The reform proposals also include ideas to support working families, such as considering tax deductions for babysitting expenses. This initiative aims to reduce childcare costs and help families balance work and life responsibilities, although details on limits and eligibility are still under discussion. Maintaining tax benefits for high school dependents. Despite broader changes, the government has decided to maintain existing tax exemptions for high school students within families. This means that families supporting children of high school age will not see a reduction in their current dependent tax benefits. Extension and expansion of home loan tax breaks. To assist homeowners and encourage the housing market, the government is moving to extend the popular home loan tax deduction program by 5 years. Additionally, the maximum eligible amount for tax deductions on used homes will be raised, making homeownership more accessible and affordable for many Japanese families. Increase in departure tax for travelers. Japan has officially decided to raise the departure tax, a levy added to international travel departing from Japan, from its current level to 3,000 yen per person, with a higher rate of 5,000 yen for business-class travelers. The additional revenue is intended to help address over-tourism challenges and fund destination management initiatives, corporate tax changes and regional tax reform discussions. The tax reform talks are also examining adjustments to corporate tax incentives, including limiting eligibility for some tax breaks for large companies. Furthermore, the government is considering ways to reduce the tax revenue gap between Tokyo and other regions by revisiting local corporate tax and property tax systems, a move aimed at promoting more balanced regional development.